Hey, good morning, everyone. It is August 13th. It's Wednesday. It's a half hour before the market opens, and we're going to talk about stocks. We made it through the busiest time of earnings, 3 weeks. A majority of the S&P stocks have reported. We got through that, and at the tail end of it, we've caught a pretty strong rally yesterday driven by inflation looking like it's not going to be a giant problem. And that, therefore, is going to enable the Federal Reserve to start lowering interest rates. It's expected they're going to lower them in September. So that really caused a small cap rally that really extended to many other stocks. I'm sure you're looking at your portfolios going, man, what a good day. Wouldn't it be nice if every day was like this? I'd be a gazillionaire by the end of the year. And it was fun to watch stocks fly up. So what we're going to do today, I'm joined by Daryl. How you doing, Daryl?
Hey, I'm doing great. Hello, everyone.
And I really get a lot out of analyzing a stock from two different points of view. My approach is to go valuations, fundamentals, look at like the long-term big picture of a company, see if it's desirable, value that stock. So it's kind of has a very long-term timeline. And what's really interesting is to hear Daryl's analysis from a technical perspective, which gives us a here's what's going on now, and here's what could be setting up. And so we're going to do that on stocks. We have a list of stocks that we wanted to cover. Not a lot of stocks are announcing, so it's going to be a couple that announce, but mostly some stocks that seem to be interesting to me. But we'd love to talk about stocks that you want to analyze and you want us to, just unassemble, analyze, beat up, talk about. And if you're a member of my channel, it's free of charge. Just put the ticker in the chat. If you're not a member, a $5 super chat, and that gets you in line. We'll take a look at the stock that you want us to analyze. Small caps are great. Big caps are awesome. We had a really good live stream last night, and we dug deep on some small caps. So we'd be happy to do that again because I think small caps may have really, really good gains in the future. All right. So we closed yesterday at an all-time high, and that is incredible. It's incredible how this market is just shaking off things and just moving higher. We shook off a pandemic. Hey, no big deal. It was just a pandemic, and we started flying up. We had a pretty good correction, and then we've been flying up. We had a pretty good correction in the S&P in 2025, and pretty much, shook that off. And now we're back on that trajectory of this rise in the S&P. And I would venture to guess that we're going to be in this for a little while. I don't know if that's a week, a month, a couple of months. We'll see. Seasonally, especially September, we tend to have some sell-offs. I wouldn't be surprised if that's the case as well, because it is feeling like there's a little euphoria present in our trading. Stocks only go up. Some stocks are just a little too euphoric, and I'm going to pick on a stock that I own. This one here went up yesterday by like 6%. It's just been going up. This is the 5-day. It's up 16%. The 1 month, it's up 112%. All right, that's just it's a little too crazy. It's a little too crazy. It's a good company. It's a good business. They really do deserve to they deserved, if you look at where they were priced 4 months ago, they deserve to be priced higher. But for the moves that this stock has seen, the market's just a little out of its mind, going up 262% over 4 months. So this is the kind of my gauge.
What do you have for a value on that one?
So Astera, and we had earnings on Astera, I think it was last week, but I think the stock based on, you know, the best cash forecast I could put together, it's rational in my mind. I'm sure somebody could say, no, I disagree. It's 60 or 45, or we could argue about the percentages, but it's got a rational structure, if anything. 33% too high based on cash flows, 45% too high based on earnings per share, using a P of 48. I'm not going higher. It's like, I'm not going to go to 100 or some nutty number. Now, this stock is flying up. I had thought about selling it, not selling it. I'm just going to ride it out. And because it's a really neat company, it's small and it keeps growing really fast. Their last earnings, they grew at 150%. So that's where I have a lab. When I started buying into it, I thought it was really nicely discounted. I started buying shares. Near the trough, we saw this thing kind of coming or setting up, and I bought at mid 50s, and I loaded up and have seen my investment really go up quickly. It's not supposed to, your investment's not supposed to go up fast like that every single time, obviously. But that's what I'm beginning to see is maybe a little too euphoric. So as a long-term investor, that's great. We're going to catch a few breaks, like some stocks really running up. I think Meta, as an example, is still priced below its intrinsic value. I think it's going to be a company that rises higher because it has one of the best strategies on the market, because they have 3.4 billion people accessing a Meta application every single day. And now we have the invention of AI. So they can introduce AI to 3.4 billion and counting people. So they have a really, really solid strategy there. I still think that Meta's priced 23% below its intrinsic value. I think it's a $1,000 stock. It's priced at $790. Has momentum to the upside, but we'll see how things play out. Why don't I kind of flip it to you? Can you show us the technicals on A-Lab and Meta?
Yeah, we can start off with Meta. It looks pretty good, actually. So we had the top at around 739 back in February earlier this year. Then we had the tariff announcement sell-off. It got back to 747 or so, pulled back to the 50-day moving average, and then has broke out above those two double tops. So it's actually looking pretty strong at the moment. 20, 50-day, and 200-day moving averages are all trending up. The RSI is not into oversold territory yet. We're sitting at 65. PPO had a bullish crossover and in bullish territory since the end of July. And the accumulation did fall off, so money flow, you can see that the money flow is negative, but it does seem to be improving at the moment. I think it's set up really nice.
Good.
It's outperforming its industry group, and the industry group is outperforming the SPX. So to me, it looks really strong at the moment.
One of the things I like about Meta is they don't need, like, if they get another 100 million customers, do they really need to do anything? For example, Chipotle, they sell another million burritos. Well, they have to buy the ingredients to make the burritos. They have to hire the people to assemble or cook the burritos. They may have to open up new stores. I mean, just a lot goes into, okay, you sold another million burritos. So Meta is literally, yeah, we can add 100 million people. And yeah, we might have to put a couple new servers into our data center, but pretty much our platform is elastic. It could just accept new customers, and we're off to the races. And we tell advertisers, hey, we're now 100 million users higher, and maybe in markets that those advertisers want to advertise in. That's part of the recipe for Meta that I think is just so valuable. Is growth is pretty darn unrestricted, very easy for them to grow. Great. And can you take a look at ALAB? While
Sure.
you set that up, I wanted to say hi to Santorio. Very good morning, sir. Thanks for joining us. We've got a good number of people on the stream. Thanks, everybody, for joining us as we talk about stocks before the market opens.
So Astera hasn't been around very long. It looks like they IPO'd sometime in March of 2024. Is that true?
Yeah.
Okay. So we don't have a lot of data to look at. It did reach a peak at around 147, also back early January. Sold off February and March, and then the tariff announcements. Since that time, it rose and then consolidated for 2 months or so. And right now it is looking very good. It broke out above that top. It's riding above the 20, 50, and 200 day, which are all increasing. It is looking a bit overbought at the moment. So the RSI is sitting at 82. That's very high. The PPO still looks really strong. Accumulation is at a peak for the last year. Money flow looks really good. Looks like it's outperforming its industry group by football field lengths, but the industry is underperforming the SPX. So this doesn't look as strong as Meta, but it still looks like a really good chart to me anyway.
Great. Yeah, and we'll see how things play out. While you have the floor, we've talked about two really high profile, I'm going to say tech oriented, because I think we could put Meta into that category. And then ALAB is a semiconductor company. But can we talk about United Healthcare, UNH? And as you set that up, I'll just kind of have a few kind of entry words. It's United Healthcare is really interesting because it has had a very successful history as a stock and as a company. It was a highly trusted stock for many years. It was very well respected on Wall Street. And they have had a terrible year, which as a value investor, as a investor that I like buying great businesses, and if you offer me a great discount, I thank you for it and I buy it. United Healthcare, big picture, is looking better and better, and it's been on a very short-term rally. But I wanted to get your eyes on the technicals and show us what you're seeing.
It is still in an overall downtrend, but it looks like it's getting ready to maybe break that downtrend. I'm thinking somewhere around the 20-day moving average, which is currently sitting at 266. Stock's trading at 261. We're looking at this before the market opens, so that was a close yesterday. So I'm keeping a close eye on this one as well. I started entering after these big drops. I hadn't been a shareholder before, but it looked like an opportunity to step into a pretty well respected company that was facing some pretty significant headwinds in the current political environment. They had a CEO of one of their businesses that was killed in New York last year. Then they got some announcements about some legal issues being investigated by the legal. So anyway, they really faced a lot of headwinds here, but I'm keeping an eye on this. I'll probably start adding more shares. I wanted to see this downtrend kind of stop. It looks like it may have stopped, and I'll just keep a close eye on these shares and probably start buying here in the next day or two. You said it was up in the pre-market. Let me
Yeah, it's up 1.66%.
Yep, sure enough. Yeah, so I may add some shares myself here.
Yeah, and I wanted to ask you a couple of questions, if I could, around this chart. So what are we looking to? What data are we looking to get over the next couple of days, maybe the next couple of weeks, that would then tell us, hey, you know what, this thing is beginning to set up really well, and it's beginning to set up a nice upward trend.
It would need to break out. This is a very short-term downtrend. So if I connect these two tops here, drag it all the way across, you can see it's getting ready to break above a short-term
Mm-hmm.
downtrend. This is
Got it.
very short term, and those can be short lived. If you have a much longer trend, those become much more powerful breakouts. But this one's pretty short. So that's why
Okay.
I'm being cautious with my language.
Mm-hmm.
We are moving up. It looks like it could be a good time if you're a believer in UNH, keeping in mind that we're still going to have a political environment that's uh, challenging to healthcare. It's not unique to UNH by any means. If I take a look at another one that I own that also got clobbered big time.
And while you do that, I would just say that in my adult life, I'm 56. I have observed that the politicians always go after healthcare companies.
Yeah,
So it's always they're the villain in the story. But again, United Healthcare and other healthcare companies for many years rewarded investors. United Healthcare, like you cited, has had just a terrible year.
yeah.
So please continue on.
A CNC, which is Centene, they play in that same environment. They're not nearly as large as UNH, but they were holding in there up until they pulled their guidance after the passage of the reconciliation bill, which looked like it was going to remove some funding away from Medicaid, Medic, not Medicare so much. It was mostly Medicaid. When they pulled their guidance, they took a 41% hit basically in one day. So UNH was over a little bit more time than that. They pulled their guidance just a week or two after UNH had pulled their guidance. So anyway, they've continued downward. They've had a few run ups, but this does not look like it's getting ready to break out, but it's something that I'm watching as well. UNH just looks a little better here.
Yeah, and I'd be curious if it's something we can get into. I've seen like companies, and I looked at the big picture for Netflix and played it right. I'm like, the market's crazy. Why is it discounting Netflix the way it did? If you can go back in history, look at Netflix and go back to, I think it was 2022 or 2023, when the market just sold that stock off like it was just a worthless company. And then the stock, just look at that beautiful recovery. Jeez.
Mm-hmm.
And What were you seeing when it bottomed out and then just started this reward cycle for investors? See how back then everything just looked terrible for Netflix. I think their the statistics they were reporting showed that, hey, maybe subscriber growth was slowing. I know that their production costs were really expensive. It costs a lot of money to film these big shows that they put on. And those were real factors in how it affected their valuation. But the market, I felt, just got carried away. It's like, guys, they have a tremendous subscriber list. They could adjust the business, but to build a subscriber list like that, Netflix had been working on that for 20 years. You can't, that network power cannot be replaced. It's a powerful company. So I bought the stock and I did really well with it.
Let me go to a different. This is a more dynamic environment, so I can go back to
What did we see back then that kind of said, hey, the market decided enough's enough. It's starting to buy this stock.
okay. So once the 50 days started falling, I mean, it just kept going. And when it turned over, if I'd have been watching it on this day, that's something that I would have been curious about. And then if we move across, it pretty much stayed above that 50-day for most of the time. It pulled down below it a couple times. Pulled down for looks like 6 weeks or so below the 50 line. And then it had been above it pretty much. It pretty much held that 50-day moving average. We're over here on its way down. I mean, it was consistently below the 50-day moving average, except for a couple of days. So the market seemed to shift its views here. And once that 50-day turned over, it started riding
People
above the
started,
50 days. So that'd have been good.
yeah.
Some good news.
Yeah, this was so Meta. I did this with Meta. I did this with Netflix, and hopefully I can put UNH on that list of, hey, market was irrational as it sold off United Healthcare. It just disregarded how much money they make. I think people, when you when you get the top line revenue, you see how big it is, and you see how much cash ends up going into the balance sheet. Cash is cash. Okay, cash is cash. You can't. That's the number one metric that, like Charlie Munger, the great late Charlie Munger, he looked at cash. That's what you want to look at. And Netflix was a different animal, not quite the cash producer that UNH is, but there was just so much value there. It was a little, it was very irrational for the market to have sold it off so bad, and the recovery speaks for itself.
Yeah. So let's go back to UNH and maybe look back. Yeah. Really consolidated for a couple years here, didn't it?
Yeah, I think the whole healthcare space, healthcare hasn't had a good year since probably 2022.
Yeah.
And ever since then, we've been in, continuous cycles of, this is a problem with CBS. This is the problem with so and so. This is the problem with so and so. You had a previous administration. You think this administration's tough on healthcare? I thought the previous administration was even worse. But I'm not here to talk about politics. I'm here to talk about stocks and how we can make money on stocks. And all right, so United Healthcare is a watch stock. It is one that I've zeroed in on, and we'll see. We'll see. It's supposed to open higher by 1.63%. Each day that it keeps going higher, I think the fundamentals will continue to build, potentially better fundamentals that more investors are waking up to and saying, hey, maybe a few bucks into United Healthcare might be a good idea.
Yep, that's kind of what I'm thinking as well. So taking that same approach that we looked at with Netflix, you can see it's below its 50-day and has been since April of this year.
Yep.
So, but you
Well,
can see that the rate of change on this 50-day is slowing down. So there's
perfect.
a good chance that we might see a rollover and it starts increasing. And
And keep in mind, big picture, if like right now, right, communication services and technology stocks, they're absorbing so much capital and stock prices are just flying up. Wonderful.
yeah, if we look at this
Yeah.
PPO as well, we can see that it's trading in negative territory. So that means the sentiment is bullish. When the longer or shorter term average, which is the black line, crosses through the red line, you can see that it
Mhm.
did that yesterday.
Boom.
That means people are less bullish or less bearish,
So
but
things are
they're not
sentiment.
bullish yet. That
And the
has to
way I
be
would put
above
it
this
is
zero line.
the data may be telling us that sentiment may be changing. Now,
Yes.
give it a few more days, maybe a few more weeks, and we could then look at it and say, hey, look, sentiment did change because now the data tells us that.
Yep.
What I wanted to share is big picture. Can United Healthcare get on a long term upward trend? For me, the answer is yes, because there's so much money in technology, semiconductor. There's so much money in communication services, Meta, Google Alphabet, Netflix, even Disney's been doing well. That if you have any type of pullback or hey, there's some new stories where maybe the data center isn't going to take so much capital next year, and you have a sell off in Nvidia, Broadcom. Well, that capital is going to want to find a home, and healthcare is classified as a safe sector. It's like, hey, that's not a bad place to be. So that type of, I'm expecting we're going to have a pullback at some point. It's just things are great, but they're not going to be great forever. So I
Yeah.
think that if the technicals show that, hey, this thing's super undervalued, it's going to start going places. I think there could be a longer term reason why United Healthcare would receive more capital. All right, so really covered that one well. Thank you. That was education for me.
Yeah.
Hopefully everybody enjoyed it.
PFE is actually looking pretty good too.
But before you jump into that, sorry to interrupt. We've got two viewers that you know them both. Mike, the dividend investor guy, I
Yep.
know him, and they've got requests out there. And let's get to those. Let's look at LFMD first, and I'm going to take back the screen, and we'll get into some fundamentals around LFMD, and then if you could set up the charts on LFMD, we'll take a look. So what is LFMD first? So this is for Mike, the dividend investor guy. This is a small cap. Man, I have been loving looking at small caps because I love making money, and making money on small caps, I think, is going to be, I think, a very high possibility with lower interest rates. So LifeMD operates as a direct-to-patient telehealth company that connects consumers and healthcare professionals for medical care in the United States. The company operates through two segments, telehealth and Work Simplify. The company offers telehealth platform comprising of RexMD, a men's telehealth brand that provides access to virtual medical treatments for a variety of men's health needs. Okay, we got that. So this is a little bit like HIMSS, where it's really focused on a couple of very typical health needs that men have. Okay, that makes sense. It's a small cap. The revenue's uh, 245, so you're not even paying 2 times revenue. They lose a little bit of money, not terrible loser here. Analysts think it's really discounted. All right. Over the 1 year, this thing's up 25%. Year to date, it's up 37%. It's had a pretty good drop over the last 15 to 683. Am I reading that right? Yeah. Geez, that's a big drop since June 18th. So that's interesting. Let's take a look at their financials. What are their financials telling us here? Well, their revenue did slow down. I've seen this with other businesses. We saw this with DSP. What other company? Catalyst Pharma, where revenue, was clicking along really nice fast growth, and then it did grow, but the growth rate is even at a percentage perspective, it's less than half the percentage that we saw in the previous quarter. I think that's what scared investors. And when did they announce? They announced on August 5th. So investors have had to this point about 5-6 trading days to kind of process the news, so to speak. Now, this is concerning, but if you think that they're going to continue to grow, then this would be potentially a pretty good idea. Now, looking at their trailing 12 months, I'm going to look at gross margins to see how much money. Wow, these guys make a lot of money. 87%. Hello. That's a very, very good metric there. What that tells me is they get bigger, they just make more and more money because they get to keep most of the money from a gross margin perspective. Free cash flow, they are free cash flowing 17.89. They were negative cash flow for a while, but now they're positive cash flow. They continue to build their business. This is still a small business relative to some of these big giant companies like a CVS. They have plenty of addressable market to go after, so that looks good. They have free cash flow margin. That's going to improve because of this gross margin, in my opinion. So this stock, in my opinion, I mean, you can value it. Let me take a look at their balance sheet before I make a statement. I just want to make sure their balance sheet's okay. So balance sheet has cash of 36 million and $22 million of debt. So they have more cash than debt. Beautiful. That's what I want to see. And I think this is a very good idea. I like this idea. I think the company, if you believe in the company, I think as an investor, I would want to look at their earnings, their website, really get comfortable with this idea is going to work. If I think it's going to work, this business is worth like $600-800 million in my mind. So this is a good idea, Mike. I like this idea. I'm going to start watching this stock. I'm going to analyze it, and I'm going to add it to my small cap watch list, but looks good. Now, let me turn it over to Daryl to see what the technicals are telling him.
It has stabilized since announcements. They're consolidating around that 661. Looks like they have support around 413 or so. 50 days declining, the 20 days declining. But if you're a believer in the fundamentals in the company, this looks probably like it's a good place to start putting a toe in the water. I do see the PPO is negative, and it looks like it may be maybe closing down a little bit, but it's still very negative. The RSI is just out of overbought, oversold territory, sitting at 31. They're in a industry group that is underperforming the SPX, but they're outperforming their industry group, the healthcare group, and sitting right even with the SPY at the moment. Doesn't look too bad if you're willing to take a risk.
Yeah, and I'm scanning for let me come back to their website. And, I think, you know, few people would argue with the statement that, hey, the market seems like it's expensive, especially these mega caps. And I can understand the mega caps getting so much interest, right? Because everybody knows Microsoft's a great business. Everybody knows that, the top 10 companies are great businesses. It's just, what should the right price be? Small caps are not quite as known, not even close to a Microsoft. So there's a lot of unknowns in a stock like this, which plays into our favor. If we do the homework and we get very familiar and establish a sense of either uh, confidence in the business, or we see that, no, this business is broken. I mean, this business is under threat. This business is getting, like, for example, I did a video on ad tech companies, and I showed how AppLovin is taking market share as the biggest company in the space, and the smaller companies are losing market share. They're not growing as fast as AppLovin. What shows that AppLovin is beating everybody else out. Well, that's a big risk to the small cap in ad tech. That's what we want to establish with LifeMD, is kind of look around their space, look at peers, and see, is the slowdown in growth percentage a trend that's going to continue for the next year, 2 years? Have they found, or is competition in their space that's going to make them less relevant, less successful? That'd be one homework item that we should be done on this stock. The other homework item is, did they announce something that is deemed to be bad news, and bad news that is changing the fundamentals of the business? Like, hey, we wanted to commercialize this drug that we've been working on. The FDA said no. And oh, darn, we just spent $50 million trying to do that. We can't sell one unit of that. That's like, okay, that changes the valuation. Bad news that doesn't really matter to me is, hey, you know, some analyst said he doesn't like the company because, whatever, some insignificant issue. Okay, that wouldn't be a problem for me. So I'm not seeing any stories that they're announcing, and I'm going to take a quick look at the company, looking at them on Google Finance, and see, is Google Finance so you guys win. So these guys are GLP-1 companies, okay? So see, here's a negative outlook report from MarketBeat from this analyst. I'd probably want to read that and kind of get familiar with what are the points that this person's making. Is it rational? Like, do they make really good points, and not have like just a overly optimistic mindset when it comes to this company? It's kind of like, let's listen to what people are saying so that we can form a logical expectation on how they're going to do in their space. But I like the idea. I like that it's a small cap. I like their profitability a lot, the gross margins. I like their balance sheet. I don't like that their revenue has slowed so much. That is kind of a yellow flag, at best. It could be a red flag, like, hey, they are being stopped by the FDA, or they're being stopped by competition potentially. So that is LifeMD for Mike, the dividend investor guy. So we're going to switch gears and we're going to talk about Fig. Fig is Figma. They went IPO on July 31st. I do not like investing in IPOs because most of the time they tend to have, it's like throwing a giant party. You spend, I don't know. Let's pretend we're billionaires. You spend $200,000 on a party, and 24 hours later, the party's over. You just got a bunch of trash on the floor and a bunch of empty drink cups. And a lot of hungover people. And IPOs tend to have a short term, like, wow, excitement, and then a big sell off. And FIG is beginning to form that type of chart. And you can look at some really good quality companies and you would see this. You would see this in, like, Robinhood's been my number one performer for the past year. It had a really well followed IPO. Stock just jumped up and then it came down hard. So Figma is kind of following. It's very, very early, but we're seeing that, hey, it's selling off a little bit. What does Figma do? Let's take a peek at what the Figma business is about. I want to keep that open because I'm going to analyze it after the stream. And Figma develops a software platform where people go in and design and develop. It's kind of a collaboration tool where people can go in, they can, let's say you're doing a software rollout, you're developing a new website, and you would have your marketing team involved, you have your technology team involved, you might even have the finance team involved, and you have outside consultants involved. They would work in this platform and then create something. It could be a website. It could be, hey, let's talk about our branding for 2026. And the marketing team gets on here and they start collaborating. I think it's a decent idea. It's not an idea that's making my head explode because I think the addressable market is there, but it's not like totally ubiquitous like Meta. Like Meta, who can use Meta? Everybody. Everybody can use Meta. It's not like, hey, I don't like complex user screens. Okay, well, use WhatsApp. It's super simple. It's like text messaging. You can use Instagram, which is all very picture oriented. You can use Facebook, which is a little busy, but people have gotten used to it. Figma has a limited market, which is going to be for companies addressing the need when they're creating together as a team, or they're creating with maybe a customer. Like, hey, a customer comes on and it's a business that builds solutions for that customer or product, and they want that customer to come into the product creation process. That way there's consensus and agreement from the customer that, yeah, that's the service, that's a product that I want. So I get what their business does. It's a software company. I like software companies because they establish software as a service revenues. These are reoccurring revenues that come back every single year. They tend to be really sticky. So I like that. The market cap's $43 billion, $820 million of revenue. So you're paying 50, call it 50 times revenue. That's expensive. Forward P is 422, expensive. Do they have competition in the space? They do. They have companies that have been doing this for some time. Now, are the companies that do this as good as Figma? Maybe, maybe not. And that's going to be determined over the next couple of years to see how much market share Figma creates. But the space software companies already provide this. These guys are just trying to be specialist in this particular space of software and provide a better experience for customers. Now, as we look at their quarterly revenue, not much there, but they are growing nicely. Okay. So not a lot of data because they just IPO'd. This is the company that Adobe wanted to buy, and the previous administration was anti-mergers. So Europe told Adobe, you can't do it. So Adobe had to pay $1 billion to Figma for the cancellation of that acquisition. That was a big check they had to write. They probably used stable coins to pay it. Anyway, moving on. So free cash flow, they are free cash flow positive. That looks really good. Their margins are terrific, 88%. Okay. And that looks good. Now, their growth rate is 50%. They're a small company, so that's kind of it's. I don't want to. I don't want to be pessimistic, but they're a small company. Yeah, they're going to grow fast, but once they get to like 2 billion, it's going to be harder for them to grow at those numbers. I would value this business at like probably 10 to 20 billion is what I would put out there. Um, let's take a look at their balance sheet. Balance sheet has wow, they do have no, they don't have much debt. They have 1.5 billion of cash, almost no debt. So they have plenty of cash to continue to build the business, but these guys are priced probably at least 50% too high. And I say that by really knowing this space. I know software quite well. And these companies tend to have a good 2 year window, maybe 3 years, where they grow into a space, they create some excitement, then they hit a wall. And some things that push back are customers don't want to run software from 50 different businesses. Like, oh, we got Salesforce for this. Oh, we got this for that. We got Microsoft for this other thing, because employees would have to be like, hey, I have to log into, they do single sign on, but my user experience on Salesforce is a little different than the one on Microsoft. And it's a little different than Figma. And it's a little different than our accounting system. Pretty soon it's like, geez, 25 different user experiences to do one job. Instead, they're willing to give up functionality to have a unified user experience. Hey, you know what? My ERP system does what Figma does. It doesn't do it as well, but at least you keep that unified user experience for employees. So that's going to be one big picture kind of threat to Figma. For me, it's not an investment that I want to make. It's too close to their IPO date. I don't like buying IPOs. I like the stock to settle down, and then I can look at fundamentals after they've announced a few times. And I have more data, and I see how they're actually performing within their industry space. So that's my review of Figma. What are the charts showing you there, Daryl?
There's not a lot of data to look at because they've only been IPO'd for a week or so. So I'm going to use even a different chart. This is an hourly intraday chart using 5-day and this is 5-hour and 13-hour moving averages. So it's sitting right at the 5-hour moving average, trading above the 13-hour. So here it was definitely in a decline, trading below the 13 and 5-hour charts. So it's looking a little better now. This is a plugin that I purchased called the No-Go charts. It's giving it a go at the moment. The TTM squeeze is also showing an improvement here. When this goes to light colored bars for 2 bars, then it's starting to weaken. So anyway, there's not a lot of data to look at, but
Yeah,
looking good for the next maybe day or two. That's about as far out as you can look with this.
yeah, yep. So that's Figma. So everybody on the stream, we've got more people on the stream now. We'd be happy. We want to talk about stocks you want to talk about. If you're a member, please put it in the chat. We just reviewed 2 stocks that members had in mind, Figma and LFMD. And we'd be happy to review the ones you want to look at. If you're not a member, it's a $5 super chat, and we can do a deep dive on a stock you want to look at. We'll look at the fundamentals, we'll look at the charts, and take a look at the stock. And while I'm at it, I put Daryl's YouTube channel earlier in the chat, and let me put it up on the screen here. If you could do me a giant favor, there's the URL, super easy. Go over to his channel. Please subscribe to his channel. And I get a lot of value from Daryl's work and research. And I venture to expect you're going to see the same value. I'm a long-term investor, fundamentally driven. And I think Daryl covers technicals in a way that I understand them. And it gives me a different lens to look at a stock. Like we just looked at United Healthcare earlier in the stream. And I think I don't have to become a technical expert. I could just listen to Daryl. Great. I could just stay as like I love fundamentals. I love trying to see the big picture. I love trying to figure out, is United Healthcare gonna come back to $600 per share and double my capital? That's the picture that I'm focused on. And I really enjoy and get a lot out of listening to Daryl. So please visit his channel, like his videos, and please subscribe, because I think you're going to get a lot of value from doing so. Did you have something?
Nope. I was
Okay.
just getting back to my standard charts.
UNH is up 2.5%, sir.
Yep.
Is that helping or hurting the situation?
Definitely helping.
And
we passed, closed above the 20-day at the moment. We're not closed. We're above the 20-day at the moment.
United Healthcare is up
getting better.
7% in the last week. It's up 3% in the last 2 weeks. It is down 12% in the last month. So it's beginning to try to pick itself up. And I bought some shares. This week. I bought shares in United Healthcare in my 25-year-old son's portfolio. And I like going with big bets in his portfolio. He's doing great, or his portfolio is doing great. So that's where I put United Healthcare. It's kind of a bet. If it works, I think I'm going to double my capital, and it could happen in a year. It could happen in 9 months. It could happen in 2 years. It could happen in 20 years. But I think it's going to happen in less than 2 years. And I think that rate of return is attractive to me. All right. So let me take the screen share back and kind of go over a few things here. So the top performers in my portfolio right now, Coinbase, it's really taken off. I think there's some stories. Obviously, Bitcoin trading above 120,000 per coin. $121,685 per coin. Where do you stand on cryptocurrencies, Daryl?
I invest only through the IBIT.
So you go ETF route.
Yep.
Excellent. And is that giving you a good rate of return? How's that going?
66.94% at the moment.
And that's not bad.
Yeah, that was since March of last year.
That's great.
Yep.
So I own Bitcoin. I used to own a fair amount of Ethereum, and I talked myself into selling it. And I own like $3,000 of Ethereum, which is 10% of what I used to own, and maybe 5% of what I used to own. But I kept most of my Bitcoin. I was on a path to try to liquidate it to some extent because I wanted to de-risk my portfolio a bit. And I stopped after selling like 0.3 Bitcoin. And I'm not going to sell anymore. I think I'm just going to sit tight and just let this thing run. But this Bitcoin price is driving up Coinbase. Coinbase will see a lot of activity. The stock is up 6.2% over the past 7 days. It's up 15%. Let me make this a little bigger. I don't know if it's showing up okay.
I was watching The Big Bang Theory last week, and they had lost their wallet that had Bitcoin in it when it was trading at $5,000. And my wife asked me, "What is Bitcoin trading for today?" And I said 120K. So hopefully they found their wallet.
That's happened to some people. Make sure you have a good process to store your, because it's serious money now. So looks like Mike is in Ether and Sol. I'm not familiar with Sol, but I am very familiar with Ethereum. Um, okay, so we got another request. Noam wants us to look at, I think it's Monday, MNDY. We'll take a look at that. And let's see here. Mike wants to look at Cart, Instacart. Let's take a look at Instacart. Maple Bear is their company name. Let's take a look. Braden Anders. Thanks so much for joining. I really appreciate you joining. Please email me at victorhinvesting@gmail.com. Thanks so much for joining. I appreciate it. I think you're getting a lot of value. And while I'm at it, I wanted to thank Michael Hersku. Please get me an email so I can get you signed up. Thank you so much for becoming a member. And Tomas Vinoras, thanks so much for joining. It's awesome to have you guys. I look forward to getting you guys on the member calls, the Discord, and obviously on this stream. If you have a stock you want us to take a look at, please put it out there. I'd be happy to put it in the queue and we will cover it. Thanks so much. So we had 3 new members on the stream. That's a personal record. Thanks everybody. So, and thanks for joining. And I hope you get a ton of value from this. Let's carry on. We're going to go over MNDY. Before I jump there, let's just kind of look at a few stocks that are moving. Futu, Alibaba. So my Chinese stocks are moving. My China ETF's moving. Astera, it only goes up. So Nova Nordisk, if we have time, I would really love to get your analysis on Nova Nordisk because I have Nova Nordisk and United Healthcare in that corner. It's kind of like, you go to a garage sale and let's say you're an enthusiast of a particular product and let's say the thing I'm thinking about is pinballs, right? You may not know this, but I had a vintage arcade in a cabin that we sold in 2022. And it was a 600 square foot vintage arcade. And I bought 4 pinballs and like 12 arcade machines. All these were classic games. And when I started buying the pinballs, I was buying pinballs for like $200. And they ended up being worth like $1,000, $2,000.
Oh, wow.
So you show up to a garage sale and somebody's got a pinball in the back there. It's Evel Knievel pinball, one of the most collectible ones. And it needs a little bit of work, but they want $100. You're like, here's the cash. I'm going to come back and pick this up. Nova Nordisk is a little bit like that. It's really dusty and dirty, but it's got tremendous cash. It's got really high margins. It's got a lot of negative stories around it. It's got a lot of dirt on it. So we got to clean it up and see if it's going to rise. But it's beginning to rise. Over the 1 day, it's up 2.3. Over the 7 day, it's up 8%. It's had a horrible month. I mean, it's had a horrible 3 months. But maybe this one is that Evel Knievel pinball, arcade pinball, that really is worth about $5,000 and they're selling it for $100. Maybe. So we'll take a look at that one later. For now, we're going to jump to MNDY. MNDY, I think, is Monday. And this is another software company. So I think our friend Noam has got software on his plate, checking out software companies. That's a very good place to operate. I love software companies. So Monday.com, together with its subs, develops software applications in the United States, Europe, Middle East, Africa, United Kingdom, internationally. The company provides work operating system, cloud-based visual work operating system that consists of modular building blocks used and assembled to create software applications and work management tools. Its products include Monday work management that manages workflows, projects, portfolios for team collaboration. This is sounding a little bit like Figma. So let's take a look. Let's take a look at their website. I am not familiar with Monday a whole lot, so let's take a peek here. So, of course, everybody puts AI into their business now. Software companies are all over that term. It's more of a marketing action item than it is a development action item, in my opinion. Plan and execute work across projects, sales, marketing, IT, and engineering. Okay. Got it. So your marketing, project tasks, CRM sales, IT support. So they can do. So when you see this, they're competing against ServiceNow, they're competing against Salesforce, competing against Salesforce. ServiceNow doesn't really do Salesforce automation, CRM, but most definitely Salesforce does. They're the dominant player there. They do operations and finance. So they don't do accounting. They're doing like finance requests, kind of requisition requests, and so forth. Okay. So I've got a sense of what they do. They got some big names like Coca-Cola, Universal. Well, this is Universal Music Group, which is not that big. This is a big European company. This is, I believe, a French company, and I don't know how to pronounce that. Okay. Lionsgate is a big studio in Los Angeles. All right. So I got my head around their business. Now let's take a look at their fundamentals. So this company, did they IPO recently? They've been around for a little while. Okay. They've been around since 2021. So we've got a fair amount of data. I like this trend here up until looks like the last month. No bueno over the last month. Down 37%. Holy smokes. What's going on? $9 billion market cap company, $1.1 billion of revenue. So you're paying, let's call it 8 times revenue. Not too bad. P ratio, forward P looks okay, 43. Strong buy with a big discount, according to some analysts. We'll see how many cover it. They are growing at 30%. Looking at the quarterly, there is kind of a drop in the percentage growth rate, but not too drastic. They are getting bigger. The law of big numbers. It's hard to maintain your percentage growth as this number gets bigger because you're comparing last year to this year. And I'm not going to freak out about this number. I'm just going to say, interesting. Okay. It came down, what looks like 350 basis points. Okay. Not a big deal. Not a big deal yet. And I see your comment, Brandon. Very good to see you. I'm going to get to it in a few minutes. All right. Free cash flow. I'm really liking this cash flow. I like this cash flow. And this is a business where they sell reoccurring revenue. They sell software as a service. Companies subscribe to it and they pretty much stick to it. If it's good software, they're going to be a customer for the next 10, 20 years. Look at those margins, 89%. Okay. All right. You got my attention. 29% free cash flow margin. Okay. You've maintained my attention. So they're growing. Let's call it 25% going forward. Their free cash flow rate is 325 million. I would say they're worth 10 to 12 billion dollars, maybe 15 billion. And I'm going to go ahead and do a deep dive on this. And because I like some pieces that I'm seeing here. I want to look at their balance sheet. Where am I here? I got myself lost. All right, $1.65 billion of cash, $126 million of debt. So plenty of cash. So this business is looking good. Now, what's this situation? Why is this stock selling off for the last month? They announced on the 11th. This is August 8th. Is there a story? And then this is, I guess they announced pre-market potentially, and then they sold off. Okay. So earnings were not well received. And They cut their forecast. Okay. So we got to get our heads around that. Why did they cut their forecast? What's the headwind? What's going on? So I like a lot of things of Monday, but I got to get my head around what's happening with the forecast. Like, are you hitting a wall? Are you seeing competition? What's going on? So I'm going to take a look at that. Why don't I, if you could take the screen for a little bit, I'm going to start setting up my valuation of Monday, and we'll return back to Monday on my screen, but maybe you can go over the technicals for the time being.
Okay. Looks like for the last year, they've had some volatility, but they're trading about before the drop a couple days ago. Looked like they were trading about where they were a year ago. Last 3 days, they've taken a pretty big drop, 30% or so on big volume. And it looks like they're almost at their average volume at this time of the day, and we're early in the trading day, and it looks like they're almost there. They have a negative RSI sitting below 30, so it is oversold. The PPO has been negative and getting worse over the last few days, so people are definitely getting more bearish on this particular stock at the moment. We have negative money flow. They are underperforming the SPX by 40%. They're underperforming the technical sector by 46%. They're underperforming their industry group by 47%, while the industry group is outperforming the S&P 500 by 9%. So it's not the best looking chart I've seen.
Yep. I think that big sell-off, man, it's really catches a lot of concerning attention. Like, whoa,
Yep.
what's going on?
Yep.
So, all right. Well, let me flip back to my screen, and I've started my valuation model for Monday. I'm using another software company as kind of like the template that I'm going to start with. And we'll construct it here. Now, this is a smaller cap, so I'm not going to use the same discount rate as CRM Salesforce because that's a really well-known business, been around for a long time, going to be around for a long time. So I'm going to go to a 9 discount rate. And we're going to go with the growth rate looks really good. When I looked at their free cash flow, it looked really good, by the way. Looked really, really good. And it's growing really nice. From 23 to 24, it grew at 50%. So I'm going to grow that guy by 30% because, as you get into a larger business mode, it's a little harder to grow. Small business, okay. So their last free cash flow was $325 million. And we're going to grow that by 30% because we are looking forward 12 months. All right, so that looks okay. Cash, they had a cash surplus. I think it was 1.5 billion, and their so 1,650 million, and they had a little bit of debt, 126 million debt. Shares outstanding are 51 million shares outstanding. So really nice discount on cash flow. That cash flow is really good. Now, maybe we're a little bit concerned about that growth. So We're going to go 25% on the growth. And I'm going to read their guidance and see what the heck's going on there. We'll read it together. Let me bring it over. So here's their earnings release that the market kind of sold off on this news. So they grew 27% year over year. Okay. Financial outlook. So they're going to be total revenue 311 to 313. So they're going to grow at 24 to 25%. Well, that's not the end of the world. Okay. 26%. They're going to grow cash flow by 26%. So I'm not seeing like, oh my God, kind of numbers. These numbers are lower than you would like because they were growing at 30%, 32%. So we're kind of getting lower. We're trending towards a lower percentage growth. Get that. But it's not like, oh my God, shocker. These guys are really struggling. Nope. That's not the case. So stock market's kind of flipping out over information that they shouldn't flip out over, in my opinion. So that's looking okay. Now I'm going kind of fast through this, right? Everybody's got to take a look at their valuation on their own. But so far, so good. So you got 24 analysts covering this stock. Let me get back to showing you what I'm seeing so you kind of follow the logic. So we have a lot of analysts cover this stock. Okay, 24 of them. Some analysts are quite optimistic that, hey, this stock could really be $450 million per share. Worst case scenario, it's going to be a $215 stock. Well, that's pretty good by both comparisons. And so that looks good. Let's see if the forecast matches what they guided. So they were guiding mid 20% growth. That's fine. That looks good. That looks good. That looks good. That looks good. And next year, which is 2026, $4.68. Nice growth rate on their profitability. Man, these numbers look good. What is the market thinking? The market has not given software companies, not all of them, a really nice break. Palantir being the exception to the rule. These guys are growing nicely. Man, market doesn't like them, but I'm going to go 15% growth. So maybe they're priced fairly if we go with, PE that's maybe just less than optimistic. And they are discounted. This is a good looking company. It has really good fundamentals. And I think one thing I want to look at is, so I wonder if they break out. Hoping to see if they would break out. Maybe they do it in other reports and things on their website, but how do they break out? Like, what line of business are they selling to? Are they selling to marketing? Are they selling to HR? Are they selling to finance? And what percentage of revenue is sold in the US? What percentage is sold in Europe, Africa, and so forth? That'd be interesting to see. And I could probably do that later. But overall, I'm seeing a lot of potential in this. The value is there. The cash flow is there. The market is flipping out, but I think we showed Netflix earlier. The market flipped out over Netflix and thought it was the worst thing they'd ever seen, and discounted the stock just drastically. And then the stock picked itself up and rewarded shareholders by like 700%. Not sure, Monday has the kind of brand that Netflix has, but it's a small cap. I like that. It has really good fundamentals. I like that. It's going to be definitely a watch stock for me. I'm going to keep looking at it and keep track of it. So Good one, Noam. Hopefully you found the analysis interesting. We'll keep an eye on it. All right, so we got more comments coming in. So Brandon, we're going to look at Instacart next and kind of cover that. It's a second request on Instacart. Sam, good to see you. I haven't looked at App Love, and maybe we'll look at it toward the end of the video. Sebastian, how are you, sir? You want to look at MRX? MRX. Never seen that stock, so let's take a look a little later. All right, Eric Johnson. What's my ideal range for number of stocks? Let me think about that one. All right, let me do a time check. Daryl, how you doing on time?
I'm doing okay.
All right, perfect.
Just got my coffee refilled, so I'm good to go.
Okay. All right. Well, make sure you have plenty of coffee. All right, so cart. Let's go to Instacart. What's going on, Instacart?
There was a release today that Amazon is adding perishables to their same day delivery. So that's putting a little pressure on Instacart. They're down about 12%, 11.5% at the moment.
That's a buy for me. So I'm an Amazon stockholder. But Amazon does a lot of great things, but for Pete's sake, it's like they don't do everything. Maybe they will someday. They're going to have robots showing up to my home. But Instacart has that specialization. I believe that specialization in certain areas is a competitive advantage. For Instacart, I think it's a competitive advantage. And they have grown their customer base really nicely. Let's take a look at their financials. So their growth is actually accelerating. It accelerated from 9% to 11%. And we've seen a couple of companies where growth was decelerating. Okay. And so that looks good. And we're living, I mean, I've got two sons that are 21 and 25. These guys, they order everything to be delivered. They're completely locked in on Instacart, DoorDash, Uber. It's like it's second nature to them. I went to a Costco Monday. Hadn't been in a Costco for a while, and was there for a product that they didn't have. So amazingly, I visited a Costco without spending $200. I kind of felt
no
proud.
way.
Yeah,
that's
like,
not possible.
That's an achievement. That's called discipline. And because I did see some deals, I was like, "Whoa, hey, that looks like a good deal. That looks like a good deal." That's how they get you. But
yeah,
back to everything's
I didn't
delivered
even
these
know
days.
I needed.
Yeah, exactly. It's like, I don't need a 25-gallon jar of almonds, but look at the deal. Oh my God, I can't resist. So free cash flow looks great. Look at this chart. Beautiful. It used to be negative, now positive. Excellent. 75% margins. Now, is the story Amazon? Is it rational? Yes. Is it an overreaction? Absolutely. Am I going to buy shares of Instacart? Absolutely. I'm going to probably buy double. I'm a dollar cost average guy, and I'm going to probably buy double what I would normally buy, maybe triple, because it's like getting a coupon and I get 10% off Instacart, and it's already discounted 53. So if you're going to give me it's discounted 53 with today's price decrement. I'm already up on Instacart. It's had a terrific announcement of earnings. It had I think a jump of like 20% or so. So the market, it doesn't know what it wants. It says, "Hey, I love Instacart" one day, and then it says, "No, I don't like Instacart" the next day. So it didn't jump 20%. It jumped up nicely, but 8.5% over a day and a half or 2 days. And Yeah, because I think we had a weekend there. Um, so this stock and it's a small cap, right? So when we're dealing with a $12 billion market cap stock, this to me is a really nice acquisition target. This is a nice Uber might acquire Instacart or uh, Shopify. Not Shopify wouldn't want to do this, but maybe DoorDash says, "Hey, you know what? We're DoorDash is $100 billion market cap. Believe it or not, that's how much market cap you get if you deliver cheeseburgers and Panda Express. And these guys are just $12 billion market cap. Such a good acquisition target. Uh, and look at that. They're already recovering. Man, I should have bought it. Should have taken a 30-second break and bought it. But I guess it reinforces what I'm saying is the news was an overreaction. I really like Instacart. I'm still going to buy shares today if it stays in a negative position. And that is Instacart. Instacart is a good little company. I like what they're doing. What do you think of Instacart?
Chart's looking pretty good. They're up 65% or so over the last year up to the peak. Then they're down 13% from that peak. The RSI did move into negative territory. I think that's probably going to be short-lived. The EPO did have a bearish crossover, but we're in bullish territory. Accumulation looks fantastic over the last year. Money flow is negative at the moment, and they've outperformed the S&P 500, outperformed discretionary, outperformed their industry group, and their industry group is underperforming the S&P 500. So it
What's
looks
their
like
industry group?
uh,
Consumer discretionary, right?
yeah, they are in consumer discretionary, and it's CS. So let me go and find that real quick.
Consumer services.
Let me go to a different set of windows here, then go to
Sorry
my
to throw you off.
sector, and then go to discretionary right here, and then go to CS, specialized consumer
Yeah.
services.
Okay. It looks like we have 39 people on the stream. Thanks everybody for joining. We are we're covering a lot of ground, covering a lot of stocks, and we are currently on Instacart trying to figure out why is the market selling this thing off for 11%
I
decrease
could
in
have
stock
saved
price.
myself a lot of time by just looking right here.
It's right there.
Tells
Cool.
me right there. There's
Right.
the sector, and this is the industry group.
All right. Now you know.
Yep.
So this one's setting up well. I'm buying more shares of Instacart. I like it when the market gives me a nice discount and I get to buy really good businesses. There's a lot of things to like on Instacart, so I'm a buyer. Let's move on to MRX. And I have no idea what MRX is. Marx Group. All right. We are in the small cap zone, $2.5 billion market cap. Excellent. I like going over small caps. Let's keep looking at small caps. And this was Sebastian. This is Sebastian's request. Good to see you, Sebastian. Thanks again for your membership to the channel. Appreciate it. Market cap 2.48 billion. Revenue is about the same amount, 1-to-1. PE ratio 10. Forward P is 9. Okay. Marx Group financial services platform provider company provides liquidity, market access, infrastructure services to clients in the energy, commodities, and financial markets in the United Kingdom, the US, and internationally. It operates through clearing agency and execution, market making and hedging, investment solutions segments. The company offers execution and clearing services in metals, agricultural products. So looking at the 5-day down a lot, looking down for the month, year to date, it's 12%. And then for the 1 year, it's up 65%. It also pays a dividend. So the 1 year looks really good. The 5-year looks okay. It had a nice rise and then a settling down. No, I'm sorry. Did the market just IPO recently? Why is the 5-year? So May. Okay.
Yeah,
So
they're new.
it IPO'd last year on April 25th. So they've been around for a year and a half, call it. Okay, so they're doing okay. Financials, they are growing nicely. They've got a pretty good revenue rate of 2.6 billion. They make their money in interest and commissions. Now, the market may be selling it off if the market believes, okay, interest rates are going to go down, so this group isn't going to make as much money because they're not going to charge as much interest. Broker commissions are flourishing right now. There's just so much activity, and the IPO market's heating up. It's already quite hot, and I think more companies that are private are probably thinking, hey, we should IPO right now. It's a really good environment to IPO. A lot of good things happening for a business like this. Interest rates are probably going to settle down, and you're not going to be able to collect as much interest. Okay, so cash flow looks terrific. Margins are low because they're a transaction-oriented company, and they're also net interest margin related company. So that's why the margins are low. They probably have some debt because of their type of business, but they have more cash than debt. Very good. 2.9 billion net cash. Looks good. Okay. I'm just trying to orient, what are they into? What businesses? This looks really good. Looks like a good business. Okay. Huh. I got to put my thinking hat on this one because I'm not sure if I should use free cash flow as a metric because their cash flow was 1.5 billion. Their market cap's 2.5 billion. So I'm going to get a really high value for this company if I use cash flow. So I'm feeling like I should treat them like a bank and look at earnings per share as well as book value because they do operate as a bank in the form of, lending out capital and then charging interest on it. That's a good part of their business. So let's
They're trading quite a bit above their book, 2.72 times on the trailing 12 months and 2.03 times forward. I would tend to price them on that book value.
Correct. Yeah. Look at their book value growth. So they have grown book value really well, especially in the trailing 12 months. So that looks good. All right. So let me kick it over to you. I'm going to try to get my head around a valuation that looks at book and earnings per share and shows what you're seeing on the charts.
Yeah, so there's been a steady decline since their peak back in May. Currently down about 28% from there. Trading below all of their major averages, the 20-day, the 50-day. They moved down below the 200-day on August the 5th. That was on quite large volume, as I can see here. They are at the bottom end of the RSI. They're not in oversold territory, but they are sitting at 34. They've pretty much been below the midpoint since the end of May. The PPO is getting more bearish. Accumulation has dropped off. Cash flow or money flow has been pretty much negative with the exception of one day. So they've been, people been moving out of this since the end of June. They are still outperforming the SPY over the last year, the S&P 500 by 42%. Financial sector by 34.85%. And then we look at their investment services, so that's their industry group. They are outperforming that by 20%, and the industry group is outperforming the S&P 500 by 18%.
Okay. So let me okay. So I'm trying to create my valuation, and okay, so the book value, let me kick it back to me. So here is some Marex, and we're going to look at their book value. So book value per share is 15.11. Tangible book is 8.29. Okay, I need to update my earnings per share. So we've got 6 analysts covering the stock. Their price targets range from $54 to $33. It's collectively consensus discounted by 24%. They're supposed to do $3.89, growing that earnings per share line nicely. Okay, $3.89. So it looks on average, if you average book value and earnings per share, it's 23% discounted. It's a small cap. it's kind of a space that I'm not fully, and I don't want to use the word comfortable or uncomfortable. It's more of these businesses tend to have a very unique proposition to the market. Like they do particular things, and I just don't have the knowledge to be able to assess and appreciate or not appreciate that. So I kind of treat them as financial services. They're doing market making. They're probably good at it, but I can't tell you if they're good or bad at it. So I would want a nice discount. I'd want to see more data before I jumped into an investment, but it looks like it's priced with a discount of 23%. The reason I'm careful with stocks like these is there could be a bigger player that takes their market over. They could see a lot of threats to their business. It's not like they have a moat. It's not like they can say, we're the only ones that do this. No, there's a lot of companies that do this, and that we're betting on. If we're investors, we're betting on they're just going to do it better than everybody else. So for me, it's interesting. I'm going to watch it, but it's not an investment that I'd probably make. It's the discount's not high enough, or I'm just not understanding. Do they really do have a moat? They do something that is totally different, going to disrupt other players in the space or the space altogether. I'm not seeing that. I'm not aware of that. I'm not expecting that. So that's why this one here is just a watch stock. I wouldn't buy any shares in it. Okay. So thanks for asking about MRX, Sebastian. Hopefully you found the analysis interesting. They have done well since they IPO'd. They're making money. So, but there's a lot of, I would say that if you look in this space, there's a lot of businesses that make money, but they don't, their valuations don't, they have kind of like a low ceiling. They don't go beyond that. The company that's done great in financial services for me is Robinhood. And the reason that I thought Robinhood was going to have a high ceiling is they're not doing it like they used to do it. They're breaking all the rules and saying, no, we're going to do brokerage services the way we think the next generation of investors want to see it. We're going to do crypto. We're going to do basically betting on their site. They call it something else. They call it prediction making or something like that. So you can bet on the Super Bowl on Robinhood. You can bet on Major League Baseball on Robinhood. You can bet on outcomes for politics on Robinhood. So those things are interesting to me. And they kind of broke themselves out and are now very desirable in my book. They're also trying to put stocks and assets, they're trying to tokenize them and sell them on their platform, which is a really good idea. That's a different animal than what I'm seeing out of Marex, which is a good player in a business that's well established, in an industry that's well established, and they have plenty of competition. So that's how I would rate them. Anything else on Marex before we move on?
Nothing for me.
All right, perfect. All right, let's take a peek at the markets. Take a peek and see. Okay, Dow is up 0.66, S&P up 0.23%, NASDAQ 0.22, Russell getting it done again, 2 days in a row, 0.99%. Small caps are making it happen. Let's take a look at the heat map. Semiconductor is going down a little bit. Looks like Microsoft's holding its stock price. Apple is doing well. Google is up slightly, just holding its stock price. Meta is giving up a little bit of the gains from yesterday. Eli Lilly, look at this healthcare space. Boom. Keep an eye on United Healthcare, Daryl.
Yeah, they're up 3% at the moment.
Nice. Tesla's up, Disney's up, Verizon, Comcast, materials are up. You know, there's a stock out there that's a small cap that is creating some noise in my portfolio, and we will look at it, AMR. And let me kind of cue that up and then check the chat. I don't want to ignore comments that are coming in. So Sebastian, great to see you. Thanks for your membership. Brandon, thanks for your membership. Braden, thanks again for signing up. Let's see here. Braden had a question. Okay. You want to look at Dave ticker. Perfect. Yeah. I've heard of Dave. So we're gonna go to Dave next. Have you heard of Dave, the stock? It really has had a lot of movement. So we'll take a look at that one next. Let me just catch up on comments and then we're going to jump into it. All right. So we're going to look at Dave. RX. So we look at Instacart. And then for algorithm. All right. So yeah, I'm sorry if you signed off, Braden. I'm sorry I missed your comment earlier. We're going to cover Dave, and I'll be sure you get some information over email if I get your email. Let's take a look at Dave. All right, cool. All right, let's take a look at Dave. Hopefully, Braden's still on. He just signed off a minute ago. So, Dave provides various financial products and services through its financial services platform in the United States. The company offers budget, personal financial management tool that helps members with budgeting and managing income and expenses, extra cash, a short-term liquidity alternative which allows members to advance funds to their account through automated clearinghouse network and avoid fees, side hustle, a job application portal. Okay. So accept all. So this is an app you can advance some cash if you need it. Okay. So it's kind of a new spin on banking. And then they've got you can earn cash back. Oh no, earn interest on your accounts. Okay. They probably have no branches, so they can keep cool. I'm glad Braden's on. So they have no branches, so they can keep their costs down. So it's a completely digital enterprise. Very good. Okay. So see, this is like Robinhood. They're not going to start a bank that looks like a bank that you've seen for the last 50 years, but they're just attempting to do it better. No. We want to break the model. We're going to do a totally different model. What's the deal with side hustle? So you can go on the platform and apply for side hustles, huh? Completing surveys. Very cool. So this is a little bit like what's that company? Upstart. No, not Upstart. Upwork. They do side hustle. It's like a job posting for side hustles. All right. So I like their innovative proposition in the market. So I like the concept. Now let's see if I like the fundamentals, which is very important. So this is why I don't buy IPOs. The IPO, everybody's at the party, having a great time. Appetizers are really, really good. And then the party's over and slam, got a bunch of dirty, empty cups, too much trash. Everybody's got to sweep it out. The stocks really come down, right? Geez, and it came down hard. If you were an investor, you invested at $318 per share and then saw your shares go down to $5.79. But now the stock has really flourished. 547%. Whew. What a rise. What a rise. Okay. So $2.7 billion market cap, revenues $433 million, net income $55 million. Okay, PE ratio 51-24. These guys are a different spin on SoFi, and SoFi has been a good rewarding stock for many. discounted by 31%. They have good growth, 48%, and they have been accelerating their growth. Look at that. That's a beautiful growth rate. 64% from 46, 37. That is getting it done. Give your vice president of sales a pat in the back. All right. Looks really good. Looks really good there. They are making money. Gross profit. Sorry. Getting ahead of myself. So gross margins are 67%. You see how they're growing gross margins as they get bigger? That's a very good sign. That means it's going to keep getting bigger as they expand. So free cash flow 191. So I want to look at their financials because I want to see if they have to report net interest margin, classifying them as a bank, or if they're classified more as a financial services company. So all right. So they grew really well. Net increase in net income, very good. They're in Los Angeles. Okay. So they have new members. They have, this is like a, so do they charge a subscription to be a member? Is it like Coinbase has got Coinbase One where they charge a subscription? Do you know that, Braden? Hey, how you doing, Tomas? Good to see you. So let's take a look. So they're guiding, they're going to keep growing. Good. Let me look at their financial, their income statement. So they're doing, see, service-based revenue. They're doing a subscription of some sort, and then they do transactions. They're doing a provision for credit losses. Some people may not pay them back, but they're not classified as a bank. That's what I wanted to get my head around. Okay. If it was a bank, they'd have to track net interest margin. So they're doing advertising. Okay, that makes sense. Let's see if they give us a statement of cash flows. No, they didn't. Okay. All right. So I did get my question answered of what type of business they are. So, all right. So these guys, free cash flow at 192. They're growing nicely. They're worth like 8 billion if you really believe in their business. This is a really interesting business. If they're going to cash flow at that rate, they're worth a lot more because they're going to keep growing. And they're going to keep growing their gross margin. They're going to keep growing their profitability. They're going to keep growing their cash. And they're creating kind of a new business within a huge industry. And I think that the creativity is probably attracting a lot of younger adults that are like, yeah, like, frankly, I'm 56. I do not like going to my bank. Nice people in there, really nice. It just doesn't have a really good experience feel to it. You walk into an industrial building, I guess it feels a little bit like I'm going to the DMV, and then you kind of do your thing. I go there every once in a while, mainly to the ATM to get cash. And if I have to walk into the bank, it's not a pleasant experience. So we're not dealing with an industry that has just such a positive kind of customer experience. So these guys changing the rules probably is more attractive to a lot of people, including these younger people that are totally comfortable with this type of digital experience. So these guys, what I wanted to look at was their balance sheet. So balance sheet, more cash than debt. Very good. All right. So let me crack open a valuation schedule. I'm going to fill that out, and I'll pass it over to you, Daryl. See what you're seeing over on on this particular stock.
Yeah, the market's pulling back a little bit at the moment. So it looks like they didn't pick the best time in the world to IPO, because 2022 was a really bearish market. So a lot of this was probably out of their control. But they really took a hit in 2022. Finally getting as low as in the $4 range. And it looks like they had a reverse stock split at the beginning of 2023. But they've had a super nice recovery. If you look from this to where they are to now, it's 3,942% gain since late 2023. So let's pull out a bit. The RSI is currently negative, but it is improving, sitting at 44.42. The PPO has turned negative. Seems to be improving slightly, so they're not very negative. They could move back into positive territory shortly. Had fairly nice accumulation. It's pulled back a little bit here recently, and the money flows have gone slightly negative, not enough. We're kind of in no man's land. I have a green line and a red line here. And as long as it's between those two, this is kind of in no man's land. It needs to either get above 0.05 to be bullish, or below minus 0.05 to be bearish. So right now it's kind of sitting in between those two levels. It is outperforming the S&P 500 by 376% over the last year. It's outperforming the financial sector by about the same amount, 350%. It's outperforming its industry group by 325, and the industry group is outperforming. So looks like a pretty strong company and a strong industry group.
Yeah, and I like small caps that have a new idea that makes a lot of sense.
Yep.
And I'm kind of putting these guys in that category. It's like, these guys, what they're trying to do makes a lot of sense. And again, it starts with, what is the existing, industry doing? Well, it's kind of like what we've been doing for 100 years when it comes to banking. And some people cringe at, oh my God, I have to talk to my bank. What a drag. And that's totally understandable. See how I kind of in my head said it's going to be like $8 billion. And I guess I was in the ballpark. So cash, I'm going to construct this guy really fast. So cash was 102 million, and then debt was 75. The reason I do cash and debt, sometimes you find a business with a lot of debt, and I decrement that from the value. I think it's a fair way of saying you may have a terrific business, too much debt, it kind of spoils the recipe. All right, shares outstanding. 13.5. Yeah, big discount on cash. They're really producing cash. That's very special. For a small business to produce cash, that means that they're doing something that's just very very profitable, very lucrative. Okay, so man, this earnings per share is huge. Am I looking at the right company? Dave. Okay. $7. So this is for the quarter. $3 for the quarter. Okay. So they're going to make a lot of money this year. Okay. So $7.08. And this is a very interesting stock. This is gonna be a stock that I'm gonna closely watch and maybe buy. What's it been doing recently? Like, has it been going up, down? What's the story there? So year to date. So it had a really nice run up. Man,
It's
went up
been consolidating since
it went up
the
267
second week of May or so.
from April 7th to July 7th, 267. Man. So, but from, I guess, from May 14th to now, up 8%. So it's been consolidating.
Yeah.
The fundamentals are just tremendous on this. And do I think they have a big addressable market? Absolutely. Huge. And this one's really interesting to me. Now, I'm not going to jump ahead and say, oh, this thing's a buy for me. It's looking like a buy. I just got to look at this, make sure I'm seeing everything right. I'm going to probably try to dig up any stories that are on it. And if I feel the same way tomorrow, I might start a position on Dave. That's as good as I can get on a really small cap like this. I like a lot of things I'm seeing at Dave. What do you think, Daryl?
It's looking like, the fundamentals look great. And it looks like the 50-day and the 20-day is turned back upward trending, and it is trading above its 5-day after trading about a week below it. So it's looking like it could be a good time to buy as long as you buy into the fundamentals and a business you want to hold. It looks like a pretty good time, actually.
Yeah, good one. Good one, Braden. Man, we covered a lot of small caps. I think our head is in the right place because the stocks that are, on top of the most valuable stock list, these stocks, they're winners. NVIDIA up 35, Microsoft up 25, Meta up 34, Broadcom up 34, TSM up. Okay, these are good returns. But these small caps, I think, are potentially going to perform better. We just got to do more homework. There's less. It's a lesser known company. And I think our head is in the right spot. If we see a lowering of interest rates, they're going to flourish. So I'm really glad that we're looking at small caps. Dave man, we covered good small caps. LFMD, MNDY, Instacart, MRX, Dave. Good ones. And Dave's going to be on my closely watch list and see if I can get into Dave. All right, let's start to wrap up the show here. We had a terrific stream. We had a high number of people on. Thank you so much, everyone. Skyline, we don't have enough time. I'm sorry. And if you would want me to look at a ticker, it's a $5 super chat, but we've run out of time. If you're a member, it's free. But if you're not a member, it's $5. But maybe next time we could look at BMNR. Sorry that we ran out of time. And thanks, Doomy Trash, for joining. Thanks, Mike, for joining and participating so much. Tomas, great to see you. Braden, great to see you. Robert, thanks for joining. Appreciate it. And for Algorithm, thanks for joining. Eric, Sebastian, Sam, Brandon, excuse me. Mike again. And then Noam, I think, was out there. Peyton, good to see you. Okay, any thoughts on you? Man, I missed that one. Sorry about that, Peyton. Let me take a quick look at you. I'm sorry about missing the comments, guys. Don't mean to do that. They just kind of come real quick at us while I was probably talking. This one came in. So you, I believe, is in security, clear secure, and you probably noticed them if you're at the airport and you have it's kind of an expedited line that you can go through and get into the gate area much quicker. You can do. The government also has their expedited program, but these guys compete with it. It's been doing really well. Looks like the 1 month is up 15%. Year to date, it's up 24%. This one, I like their overall growth, but I think their margins were not as good as I would like. So let's see what's been going on with this stock. So they announced on August 5th. They grow nicely. The piece that is not my favorite, and it looks like they're 63% margins. That's still really good, but it's not great, but it's good. It's very good. 63%. Profit margin 21%, free cash flow margin 36. So 305 million, and I think I do have a valuation on these guys. So yeah, these guys are discounted. They just wouldn't catch a rally for a while. You see how they sold off and they were just kind of bumping along the bottom. They just started catching the rally, and these guys make a lot of sense. I mean, people travel, they want to use this service, as well as they also provide other security services. This one isn't, it values well. I think I have a valuation on it. I want to make sure I covers you. I'm going to put a star on my notes here. And so see how discounted this stock is, because their cash flow is really good. Their fundamentals are good. The piece that I had trouble with on this one, and it seemed like they're providing a service where people are involved, and that's not as lucrative as like a cybersecurity company where they write a piece of code, sell it to 1 million customers, and make a lot of money. These guys have to hire people that assist people in getting through the gate area at an airport, as well as other services. So this one here is discounted, and it's caught a really nice rally in the market. So it's looking good. So it looks like a nicely discounted stock. It's beginning to really work. It had a really bad sell-off here. November 6th, so that was probably an earnings report. They really sold off. Let me see if I could trace back their quarterly. So that was probably this quarter that was announced. So you see how their percentage growth rate is slowing, but not terribly fast, right? They're getting bigger. They're not quite $1 billion in revenue yet, but they're getting there. All right. What are you seeing on you?
They are in an uptrend. The 50-day crossed above the 200. It's trading above the 2050. It is nearing overbought, but it's not quite there yet. It's at 69.53 on the relative strength index. So that looks actually still good. And the PPO is in bullish territory, and we did have a bullish crossover, so it appears that people are even more bullish. Money flows are kind of in no man's land. Accumulation is back to where it was in October of last year. You can see where it was trading been about 36. So we might have some resistance at about that point. So keep an eye on that. You may see a pullback. They are outperforming the S&P 500 by about 8%. They're about flat with the technology sector, and they're underperforming the software group, while the software group, it is software, right? Yep. Well, it is the software group is outperforming the S&P 500. So it does look like a good chart. Keep an eye on this resistance at 36 or so.
Perfect. So I will email Peyton and let him know we covered it so he can come back and watch the very end of the stream. And he has access to the valuation through the shared folder. I share all my valuations, my research with members. So I'll make sure that he has that as well. So he can see what we're seeing in this stock, but it's been going in the right direction. Excellent. Daryl, great job. Thanks so much for joining me. Man, we covered so many stocks. That was fun.
Thank you,
Look forward
Victor.
to the next
I
one.
appreciate it.
Yeah, yeah. And again, I put in the chat, let me find it one more time. So here's Daryl's, here's the direct link to his YouTube channel. Visit his channel. Please subscribe. I think you will learn a lot from Daryl. You'll be able to see stocks in a different way. I view stocks from a long-term investing perspective, big picture, fundamentals, value stocks on cash flows, earnings per share. Really go through that. But it's really interesting to sit back and listen to Daryl's analysis on that same stock and see what behavior the market is exhibiting and what the data is showing about trends. Like we did with United Healthcare. That was really interesting. So please subscribe to his channel. And that is it for today, folks. Have a terrific day. Good luck with your investments, everyone.